For today's Business Matters, we have Don Ma here with us. Don, good to see you. What's happening in the world of business today?
Yeah, good to see you as well. So I'm going to talk about wages to start off. So ride-hailing app Lyft has unveiled a new program to try to attract drivers. It's known as the Preferred Drivers Program. It comes with higher pay for longer than expected trips and prioritizes members with a safe driving record. Now, drivers with a higher safe driving score will receive more ride requests, and there's a new earnings dashboard as well. So drivers will also be able to see the estimated hourly rate for each ride to help decide if a ride is worth their time. Now, PepsiCo has cut its annual sales growth forecast. The company says consumers in North America reduced their spending on sodas and snacks and are opting for cheaper private label brands. Pepsi has been able to prop up its profits with price increases on top of cost controls and measures to drive operational efficiencies. And Hong Kong stocks have suffered their worst day in 16 years. Shares dipped more than 9% after no new stimulus measures were announced by China's National Development and Reform Commission. Stimulus measures in China had lifted global stock markets in recent sessions. And the Trump Organization will be breaking ground on a $1.5 billion golf course and hotel project in Vietnam. So in a statement, real estate developer Kimbak City announced that its subsidiary has partnered with the Trump Organization for the development in the Huang Yin province. The project will consist of two 54-hole golf course systems, a network of hotels and resorts, and a modern residential complex. A recent Reuters analysis found the golf course and resort business was the biggest driver of cash flow for the Trump Organization. Now, no timeline, however, was given for construction. And it looks like gold is on a shining streak. The World Gold Council reported that gold exchange traded funds, or ETFs, registered inflows of $1.4 billion in September. And that is the fifth consecutive month of inflows. And this is a sharp turn after 3 consecutive years of outflows against the backdrop of high interest rates. And the Fed's rate cuts have buoyed the price of the precious metal. It touched a record high late last month at more than $2,600 an ounce. Gold ETFs store bullion for investors and account for a significant amount of investment demand. U.S. property insurance stocks tanked yesterday after Hurricane Milton intensified. Now, Milton could be another costly disaster for the industry to cover this year, and insurers could face billions of dollars in catastrophe-related claims from a devastating hurricane season. Now, severe and frequent natural disasters have accelerated the industry's retreat from high-risk areas, like Florida, for example. Some companies are doing better than others, of course. Heritage Insurance has a large presence in the Sunshine State. It was last down over 25%. Universal Insurance was down over 7%, and HCI Group almost lost 5%. Meanwhile, Generic, which makes generators that power homes during an outage, it was up 8% earlier today. Now, joining me is Joseph Trevisani. He's the senior analyst at FX Street. Joseph, how are you doing today?
Hi, Don. How are you? Nice to see you again.
So the reason I called you here today is because I wanted to wanted you to tell us about what's happening with bonds right now. So yesterday, the 10-year yield closed above 4% for the first time since August, and a big turnaround from its 2024 low of around 3.58%. Tell us, what's the deal here?
Right. Markets are looking at the last NPR number that came out, the non-farm payroll, the NFP number, was much better than expected. So you look at that and you're saying, well, the Fed was worried about the job market, perhaps, that it would slow down because the prior month was less than expected. You have this good number, and so you don't really have that concern there. So if you don't have that concern there, then you have a much greater chance that the Fed's not going to do another 5%, another 50 basis point cut. So the odds on that are down. In addition, you have oil prices up about 10%. They were down today, and this is on speculation what might happen in the Middle East if Israel chooses to bomb the Iranian oil industry. It is a possibility. That, of course, will filter through to inflation. So both of those things, I think, are weighing on bond prices and sending the interest rates up.
All right, can you get into a little bit more about what does the current bond yield indicate about investor sentiment, perhaps regarding the economy, the Fed?
Well, the Fed's logic for their rate cuts, I mean, they cut by 50 basis points, which was probably a little more than the market expected if you would have in a percentage. And they figured in their economic projections for the end of the year another 50 basis points. That's 100 points in a little more than 3 months, in a quarter. That's a pretty fast run in rate cuts. So what would be the logic behind this? Well, the logic is that the economy is slowing. The job creation is slowing down. But if you look at the numbers, that isn't really there. You had 3% in the second quarter. The Atlanta Fed GDP Now projection for the third quarter is running 3.2%. So if you look at those numbers and a much better than expected non-farm payrolls, the logic of a slowing economy isn't presented in the numbers. So the Fed has good logic perhaps here to pull back and not do another 50 basis point cut.
Now, Joseph, correct me if I'm wrong here, please, but I thought the 10-year is supposed to be influenced more by the long-term outlook of the economy, whereas the 2-year is more policy sensitive. So why are we seeing yields rising across the board?
This is true. I mean, but remember, you have an inverted yield curve here, and it's still inverted. The short-term rates are higher than long-term rates. So you're having an adjustment as I think that Fed attempts to both normalize their policy, and the markets expect a reversion to the normal status, which of course are long-term rates higher than short-term rates. So that's filtering into this effect as well.
Okay, what do you think that the Federal Reserve is most focused on right now in deciding the pace of future rate cuts?
That's a very interesting question, because the Fed, when we looked at the inflation rate that came out of the COVID lockdowns and the spending by the federal government and the shortages, the Fed at the time said this is transitory. This is not going to be a long-term effect. That turned out to be incorrect. So then the Fed goes, you might say, overboard, or at least very aggressively against inflation with 525 basis point increases in a little more than a year. And now they're pulling back on that. So what is the Fed's logic? They keep revolving around very rapid adjustments to what's happening in the economy. But in fact, it seems to me that the economy is not slowing down appreciably, that the job market is not really reeling from the 525 basis point increases. So the Fed's quick change on all these policies seems to be overdone, in my opinion.
So taking everything into consideration, the Fed, the economy, long-term wise, where do you see yields stabilizing at?
I think yields probably, the Fed's logic for all of this is, they didn't really mention it specifically, but it's that the neutral rate is lower. Now, no one really knows what the neutral rate is. They can say, well, it's higher than here, than lower than here. The neutral rate is kind of determined empirically. If you raise rates and the economy slows down, you're probably above the neutral rate. If you lower rates and inflation and the economy speeds up, then you're probably below the neutral rate. But I think the Fed is saying that the neutral rate, the normal rate for the Fed funds is lower than here. I would guess between about 4% would be logical. So I think that's where the Fed is heading. There isn't a lot of indication in the statistics that that's warranted.
Okay, let's talk about knock-on effects, if any. Is the rising 10-year Treasury yield going to influence borrowing costs?
Well, yes, of course it would. I mean, right here, with this little rise we've seen here, we've seen about a 40 basis point rise in both the 10-year and the 2-year in the past 2 and 3 weeks. That's a pretty rapid increase. Is that going to drive interest rates all the way back up? I don't think so, because the markets are still, meaning market rates, mortgage rates, credit card rates, things like that. I don't think it will drive it back up to the peaks, because the market is still anticipating Fed rate cuts, more cuts. The Fed has said there's going to be more cuts. So I don't think you're going to get a real rebound in market rates, although they will edge up with the change.
Okay, last thing, any credit risk in your mind with rising Treasury yields?
I don't think so. And the reason I don't think so is because they've already been higher most recently. We had the Fed funds rate was higher than it is now, and any interest rates which have come off and head back up have already been higher than they are now. So I don't think we're going to get any risk from that. In addition, as I said, the Fed is still planning on cutting rates. What's really changed is the anticipation of when they're going to cut rates.
All right, Joseph, pleasure speaking to you today, as always.
My pleasure. Thank you very much.
All right, moving on. Walmart is focusing on a new category of customers, ones that are furry and walk on four legs. So the nation's largest retailer has announced plans to expand its pet care business. By next month, Walmart is going to open 5 more pet service centers in Georgia and Arizona. They're going to provide services that include veterinarian care and pet grooming. Walmart's VP of Merchandising for Pets says the pet category is an attractive growth opportunity for the company. She notes that it resonates with customers across age groups and tends to hold up even with stretched budgets. And the centers will be under the Walmart name and staffed by pet product company Pet IQ. Now, the godfather of artificial intelligence, Geoffrey Hinton, wins the Nobel Prize in physics. He warns that AI could actually lead to human extinction. And today, he said that he'll do it all again. Here's the story.
How do you feel right now?
I'm flabbergasted. I had no idea this would happen.
Geoffrey Hinton, the godfather of AI, has won the Nobel Prize in physics. That's for his contributions to machine learning. He shares the prize with fellow pioneer John J. Hopfield, who made previous contributions that Hinton built on. Hinton says generative AI will have a huge influence.
So it will be comparable with the Industrial Revolution, but instead of exceeding people in physical strength, it's going to exceed people in intellectual ability.
Hinton says nobody knows what that'll look like. He predicts much greater efficiency at work.
His work on the backpropagation and his efforts from the 80s and 90s have built the foundation for everything that we know now as the modern AI field.
AI researcher Hamoudi Nana says Hinton is one of AI's founding fathers, mentoring the next generation of AI researchers, including Ilya Sutskever. Hinton has warned AI poses an existential risk to humanity. In a 2023 video, he says superintelligence may come sooner than expected.
I suddenly realized that maybe the computer models we have now are actually better than the brain. And if that's the case, then maybe quite soon they'll be better than us.
When receiving the prize, Hinton said over the phone that he regrets his work, but
I would do the same again. But I am worried that the overall consequence of this might be systems more intelligent than us that eventually take control.
The risks include economic collapse, human subjugation by machines, and even human extinction.
The jury is still out on whether AI in our lifetime will get to that point where it's capable of literally taking over to such a degree that it could pose an existential threat to humans.
Wasim Mirza is the host of the Future Tech Show. He says many experts are worried, and talk of Skynet coming to life, as in the Terminator films, is not going away anytime soon.
A State Department official says that China is flooding global markets with lithium and causing a predatory price drop. Jose Fernandez, Undersecretary of State for Economic Growth, says China is doing this intentionally to eliminate competitors. China accounts for about 2/3 of the world's lithium output. The critical metal is used mostly in battery technologies, including for electric cars. A dip in EV demand and China's overproduction have largely caused the price of lithium to fall more than 80% in the last year. Fernandez says the low price makes it difficult to diversify supply chains and hurts countries like Portugal that need investment to develop their energy industries. Now shoppers, beware, scammers are trying to cash in on Amazon's big Prime deals. A cybersecurity firm is warning Canadians to beware of an influx of scammers posing as the tech giant. Checkpoint Software Technologies tracked more than 1,000 newly registered Amazon-related web domains in the month leading up to the sales event. Now, the company deemed nearly 90% of those domains to be malicious or suspicious. The firm warned that scammers are likely posing as Amazon and offering outrageous deals that appear to be associated with Prime Days to trick shoppers into clicking on malicious links. And we popped into 2024 Advertising Week in New York. NTD's Sean Marshall was there to give us an insider view into the activities. Take a look.
It's the 20th anniversary of Advertising Week New York. There are multiple floors of unique experiences, popular speakers, and networking for advertisers of all types. And it lasts all week. Of course, unique types of advertising could be seen at Advertising Week, from on-demand TV service Netflix advertising their popular TV shows to social media surprising me with their pop-up escalator Snapchat camera. And here is a booth for a Secret Media Network, which covers over 200 cities across the world, uncovering those local hidden gems.
Kind of amplifying local voices as well as local businesses that we really feel empower the community, add something valuable to the community, and really add inspiration to everyday life in cities, which includes Secret NYC, Secret LA, Secret Miami, but as well as Secret London. So we're all over the world, bringing inspiration.
Secret NYC's website is actually how I came across a recent story idea about the Locavore variety store.
Yeah, so we've specially curated a Midtown guide in partnership with Advertising Week New York. And the whole concept is about guiding people and helping them navigate this huge experience as well as Midtown while they're here from out of town to enjoy like the best spots and their downtime.
Some of the biggest brands had their new releases on display to try out, like Meta's Ray-Ban sunglasses. Canva had mocktails. Those are non-alcoholic cocktails to go along with their explainers to people on different ways to use the Canva app. Instacart's demo of their Caper Cart attracted my attention.
So we have cameras all around the cart, which will pick up the barcode of the product as you're putting it in. As you can see, it's adding directly to your virtual cart on the cart. And it's a seamless checkout where you can do it directly from the cart. And you can also add in vegetables. You add them in by item name or code, and it weighs it at the bottom.
Guest speakers are talking around the clock all week at numerous locations on each floor. Over 17,000 industry pros, more than 1,200 speakers, and over 500 sessions of all types going on.
I'm loving it, McDonald's. I'm loving it, McDonald's. Show me. Yes, that is there.
And the event will continue until October 10th and travels around the country. Sean Marshall, NTD News.
Now, quickly on to markets. Wall Street's main benchmarks ended higher today, recouping some of the previous session's losses. And this comes as investors bought back into technology stocks. They're also shifting their focus to upcoming inflation data and the start of third quarter earnings season. So just a refresher for you, yesterday all three of the main indexes suffered a sell-off on Monday, so falling roughly 1% each as they were pressured by surging treasury yields as well as escalating Middle East tensions and a reevaluation of US rate expectations. So treasury yields eased somewhat today and that helped tech stocks, but with that being said, it's still interest rate policy that is guiding traders and the US equity markets. All right, and that's all the stories happening today in Business Matters. Carrie, Fiona?
Don, I gotta say that Nobel Prize winner in physics saying that AI is gonna take over the world has me a little nervous. What do you make of it?
Well, it's interesting. He says that these supercomputers perhaps may already exist and are smarter than people. But he said he would do it all over again. I mean, what's up with that?
Yeah, I really don't know what's up with that, but I will say I do find the development of AI, I mean, it's useful in some aspects, but I think it's really important to keep that human component within this whole process because, I mean, at the end of the day, a machine is not human.
Yeah, But on the bright side, if Skynet and Terminators do become a reality in the world, in the movie, humans actually won in the end. So maybe that'll give us some optimism.
Yeah, you're right, Don. Keeping the faith in humans, right?
Keeping it positive and looking forward to things. So we'll see you back here tomorrow, Don. Thank you.
All right.